Okay, and we are live. All right, we don't have anyone on as yet, but of course this is recorded, and anyone who comes on, they will get the replay. So
Yes.
it's just going to be awesome. All right, so welcome everyone to the first home buyer webinar by Allie White and myself, Trudy Sherhoff. We are so glad to have you here because we realize that the information that we have is so important, especially with how the housing market is going right now. And
Right.
so, especially for persons who are first time home buyers and new to Canada, you want to find out what you need to do to be able to have a home as well. All right, so welcome once again. So, how the session is going to go today is I will start off just giving you some information with regards to the financing side of being able to purchase a home. And then Ali will then step in and show you with regards to the actual getting out there and finding a home, what you're looking for, and so forth. All right. So, without further ado, I'll get started. All right. So, as I said, we'll be looking at how to do the financing side to a home. But let me introduce myself first. I know probably a couple of you would have a problem pronouncing my surname. That's all good. It's Trudy Sherhoff. I'm a licensed mortgage broker, and you can see my direct line there as well, my email address, and also my website. Okay, and we are able to do quite a few services, and so it's not only to first-time home buyers that provide services to, but you'll see the list of services there. We also do, normal purchases, refinances, renewals, debt consolidation. If you're self-employed as well and you're looking at buying your first home, we can get you there. We know exactly what you need to put together. New to Canada, which we'll be addressing today, home renovations, and if you want to be able to take out the equity out of your home to do any investments as well. So all of that we cover. All right. And as I said, I work with Mortgage Alliance. And what's huge about Mortgage Alliance is that we're part of the M3 group. And this is the number one non-banking mortgage originator within Canada. And so we have over 2,000 mortgage professionals across the country of Canada available. And we have been able to assist over 25,000 Canadians every year, just for them to make sure that they have the right mortgage. Okay, so our agenda for today, at least on my side, and Ali will come in with hers, is that, we want to make sure that you understand who is in fact a first-time home buyer. And then, when you consider yourself new to Canada, okay? And then we look at the essential steps you need to take as a first-time home buyer. And then we look at the different options available to you with regards to getting a down payment as a first-time home buyer. And always a great question, as I had discussed with Ali before we decided to do the session, is why choose a mortgage broker, right, as opposed to a bank? So we'll go through those options as well. Right. So I always like to start off with this saying because I think this is huge. An educated home buyer makes a successful homeowner. Once you know what options are available to you and you understand those, it means that nobody could put anything over you. You understand exactly what you're going into and what's expected. All right. I'm seeing, just to pause here, someone is saying they're not hearing anything. Ali, are you hearing me okay on
Yeah,
your
I
end?
can hear you okay.
Okay. Yeah. It may be just you, Motosoy. Just let me know. Maybe you should try your sound again. Okay. All right. So, as I said, the first topic that I wanted to look at is a first-time home buyer versus if you are new to Canada. Okay, all right, she's all good now. That's good. All right. So, interestingly, even though you may be living in Canada for a number of years, and you may have owned a home before, if you haven't owned a home in a period of 4 years, you are considered a first-time home buyer. All right. And as a result of that, there are going to be different options that are going to be available to you, as opposed to, doing purchase or a renewal, and so forth. So that's an important factor as well. It's also interesting that it could be just one, if it's two persons who are buying a home, it could be possible that just one would be considered a first time home buyer, and then you'll have those options available to you as well. Okay. Um, the good thing too about it is that when you're a first time home buyer and you've been in Canada for a couple of years, you can actually borrow your down payment, right? As opposed to being new to Canada, and that's the specific item with being new to Canada, the down payment has to come from your own funds. It must be from your own savings. All right. So even if you're bringing it from abroad, if you bring it in, you have it saved here and it's yours and you can prove that it's yours, then you're all fine. There are different qualifications for you to meet as a new to Canada. And this is something that we will discuss later on as well. But what you should note is that if you've been in Canada for less than 1 year, usually you required a down payment of 10%. Once you've crossed that 1 year marker and we have proof, we can probably look at how long you've been renting for while you're in Canada, or you can prove that you've paid your bills for 1 year plus, you be able to make you qualify to be able to make a down payment of 5%, right? And I think that is a huge difference as well, between 5 to 10%. So sometimes, we would recommend clients, if you can wait sometimes for until you reach to a year, then it's great. It makes it a lot better as well. And I can give you from my own experience, when we came in, we waited for a year and then we're able to purchase a home, and I was able to just make that 5% down payment. Also, there's a time period as to how long you're going to be able to be considered to be new to Canada. And with most lenders, it's within the last 5 years. Right? Once you cross that 5 year marker, you're no longer new to Canada after that. All right. All right. So, as I said, there are 8 things that we look at, and we could probably break it down into even further bits and pieces, but there are essentially 8 factors that we look at when you're buying a home. All right. One question you need to ask yourself is your income enough? Right. Why does a lender need to know what your income is always a question, because one of the requirements we look for is we ask you to provide your pay slips for the last 30 days. We need to have that on file. They also want to have a look at your bank statements and so forth. You also have to provide a job letter as well. Okay, so the reason why a lender wants to look at this is that because they can use this to prove your financial stability. Make sure that, this person, they're going to be able to make their monthly payments. Okay, so they look at how you've done historically with making other payments as well, right? It's also used to determine how much they can lend you. Okay, so based on your income, they look at that just to see, all right, how much capacity do we have that we can lend this person so that they are not, they don't go overboard. And that's where it comes in, where they check your debt load. All right, and I'll go a bit further into that in the next slide. But it's important that we know exactly how much you can afford. So what you would find is that it also depends on your working conditions. So for example, if you are full-time, in you're working full-time, and you're actually getting a salary, then there's specific requirements that we will have from you as well. And then also, if you are probably working where it's a weekly salary, where you are being paid on a weekly basis, or you have an hourly rate, then there's specific conditions that we would need from you as well. Okay. If you are working part-time, or you're not guaranteed hours, again, what the lender is going to ask of you is that you can show that you've been in employment for the past 2 years. They want to, again, they lengthen that period to have a look at, your income, so that they have that comfort as well, that you, again, can make those payments. And just to go back with regards to being a salaried or hourly guaranteed person, what they require of you is that you can show that you at least have 3 months that you've been working and that you're past probation. Once you've passed probation and you have confirmation from your work that this person is full-time and we're paying them, then again, this is good and they will consider you for the loan as well. Right. Again, just want to raise that if anyone has any questions, please put it in the chat. I am seeing comments coming up. Great to see you, Avril. Between myself and Ali, we would come back and ask any questions. So if you can hold your questions until the end of the chat, that will be awesome. All right. So as I said, I wanted to talk a bit more about the debt load, because I know you often hear that term and you're wondering what does it mean? So what we're looking at is how much you can afford. There are two ratios that both the banks and lenders look at. One is called the GDS, and what that is your gross debt service ratio. And that's, in other terms, is your total monthly housing cost. Okay, so that would include your mortgage payments, your property tax, and heating. All right, heating has to be included there, especially in Canada, because you have to make sure that you can heat your home to live here, really. All right, and interestingly, 50%, if you're looking at purchasing a condo, we have to include 50% of that cost as part of your housing cost as well. So when you include those 3 or 4 items, they must not exceed 39% of your gross income. Okay. And I know it gets scary when you talk about numbers, but don't worry, let's chat after. If you have some considerations, we can crunch the numbers for you so you can get it. But I think it's so important that you understand the two ratios that are used to determine if you can purchase a home. All right. So that's the GDS, the gross debt ratio. And the standard is 39%. Right. The next ratio we look at is the total debt service ratio. So besides your housing cost, you're also going to have other debt that you would have because, of course, you've been living here for some time. You have other expenses. So say, for example, you may have a student loan. You may have some credit cards that you may have outstanding, a line of credit, a car that you may have, borrowed. All of those things they want to consider to see how that will fit in when you add also in your new housing costs that's going to be coming in. All right. So the marker for that is 44% of your gross income. All right. This is before taxes come out. They look at 44% of that. Just as a side point here, anyone that is looking for a home and they're ready to buy their first home, we would always recommend that you purchase a home before you purchase a car. Okay. There you go, Ali. A car, the debt on a car can throw your ratios out of whack. If you're looking at buying anything substantial, wait until you buy your home. All right. You would find that the lenders for the financing for cars, they're less lenient. They're not as strict with your ratios and with your credit scores and so forth, as much as when you're doing a mortgage. A mortgage is a big deal, definitely. All right. All right. So the third point is your credit score. Now, I myself, I'm an immigrant as well. So my moving to Canada, it was a big change with, finding out how your credit score impacts so much that you do here. Okay. So as it says here, the credit score determines which lenders will work with you and how big of a loan your mortgage you can get. Okay, so what they're looking for when they're looking at your credit score is your ability and willingness to repay your debt obligation based on how you've done previously. How have you met with your other payments that you've had? Are you meeting your loan payments? Are you making those? If you have a line of credit, are you making that payment consistently as well? Okay, they also look at the credit score to be able to confirm your income, what's coming in as well. And also, they also check your current liabilities. Okay, so from your credit report, we're able to see what debt you still have outstanding at that point. And I want you to note here that sometimes the credit report may not always be correct. There may be things on the credit report that need to be updated because, Equifax or TransUnion just hasn't done it as yet. So it's a good time for us to have a look at that as well, to see if we need to send in a request for them to update it so that we have the right score that's supposed to be, and present that to the lenders as well. Okay. It also, we use it to be able to confirm their identity so that the right person is, the same person on the mortgage loan as well, right? The ideal score when you're looking at a mortgage is 680 and up. And you'll see that diagram that I have there so that you can see where everything falls. Also on the side, I've just noted the different things that impacts a credit score. And again, I want you to remember that, yes, you may not think your credit score is great. There's some lenders that are willing to bend a little bit. So please still reach out. Let's chat and we can discuss it. But then there are other options where I can assist you with making sure that we can get your credit score up so that it looks great in front of the lenders when you're ready to proceed. All right. All right. So fourth point, how much down payment do I need? All right. As I said in the beginning, for someone new to Canada, the range is between 5 to 10%, but you can go as high as 20% when you for a requirement for a down payment. And what a down payment means is it shows how much equity you are putting into the home at the start. And lenders require this because they want you to have some skin in the game. They want to, you to be able to show them, yes, I am serious about this. I want my own home, so I am putting part of this amount into this property as well. Okay, so between 5 to 20%. I've had comments from clients looking at, so why, if I put 20%, there's certain costs that you may be able to avoid. There's the mortgage default insurance that comes into play here, depending on your down payment as well. All right, and with the companies that organize the down payment, the mortgage default insurance, once you cross the 20% down payment, once you put 20% or more, you don't have to pay a mortgage default insurance. But I want to talk about this a little bit more, because what the mortgage default is in fact doing is that you're considered to be a bit more risk involved with your mortgage because you've put less than 20%. And so a lot of people want to either put 20% or save up for 20% in order to avoid this payment. But I also need you to look at it this way. Rather than putting 20% and say you put 10 or 5%, what that does is it leaves that 15% for you to be able to do other stuff on your home as well. You have to purchase furniture. You may have to do some renovations on the home depending on the situation that, the type of home that you bought. You may be even able to invest this money and get better returns than locking it into the equity of your home at that point in time. So it's something to consider whether 5 or 20% is something that you can put in as well. And then when you do the calculations for the mortgage default, it's usually not that big a payment that you have to make. So again, this is an opportunity for you to also reach out. Let's discuss the numbers and we can do a comparison so that you can feel a lot more comfortable with that. All right. I did mention that point before with new to Canada. Once you're here less than a year, 10% is the normal requirement, while if you're here for more than a year, 5%. Okay. All right. So it's always the question, what if I don't have that 5% down payment? Because sometimes coming up with that 5% down payment can be a big deal for some people, right? So there are other strategies out there available. And one big one that's available across Canada is the Homebuyers plan. And what that allows you to do is to be able to draw funds on, say you have an RRSP set up, where you're saving towards your retirement, you can actually borrow from that, right? The beauty of that is that you can pay that back in 15 years, right? So 15 years, it's a long time. So you have some time where you can pay that back as well. Okay. And the good thing about it is that you're not going to have to pay tax on that as well because of the purpose of the loan. Okay. The other option that you have is the down payment assistance program. And Ali and I were just talking about this last week, where they've just increased the level for the down payment assistance program. And this is where the government is able to lend you the money for your down payment, that 5% down payment. And there are certain requirements for that. And I don't want to take too much time today, but reach out to me. I can share the links with you. They're available where you can just reach out, and it's free information. But the limit now is where you can go up to 300,000 for a home. So you can get 5% of that to go towards your home. There are certain requirements that you have to meet to be able to qualify for this down payment. Okay. And again, this is something that we can discuss later. Okay. So another huge part of being able to purchase a home is to be pre-qualified. This makes things so much easier for you. It means that you can actually go out and start looking for a home knowing, hey, I qualify for this level. Okay. And instead of trying to guess maybe or looking at something that's way above your limit and being disappointed when you can't afford it as well. Okay. So when you're pre-approved, what that means is you're able to lock in your rate as well. And keep in mind that if rates fall at that time, you will get the lower rate. If they rise, you'll be locked in at that rate as well. So it is to your advantage. Okay. Also, this will get Allie's attention and you will be prioritized because she knows, hey, that person is pre-qualified. All right, she's not pre-qualified, pre-approved. There's a difference, right? So with that pre-approval, you kind of get moved to the top of the list, right? So Ali knows this is a bit more urgent. We need to get this because with a pre-approval, you're usually locked in for a certain period of time as well, right? It could be locked in between 90 to 120 days. Okay, so as I said, you're able to shop with confidence, and sometimes sellers actually want proof that you can get financing, and this can be used for that as well. And so it can help to move a deal a lot faster by being pre-approved. Okay. So at this point, you're ready to go house hunting. And once you sit down and you meet with Ali, she can help you find the right home. You just let her know what conditions you're looking for. If you're looking for a pool, if you have to be close to a bus stop, a great school, she will get all of those things sorted for you. So then you're ready to go with that once you have all of that, those conditions met. And so the final steps, what you're looking for is shopping for home insurance. Keep in mind that with any lender, that's one of the conditions that you must have. Shop for home insurance. It's a must. Okay. So once you have that home insurance, then there are other closing costs that you'll have to consider. All right. So there's property taxes. Say you're purchasing not a new build, but a pre-existing home. There may be property taxes that are due still on that home that you may have to pay, or you may have to pay back to the seller. So you would purchase, you will also pay that forward. When you sit down with a solicitor, you would have to do the legal fees, and there are different parts of the legal fees that you'll have to meet. And part of it is usually the cost of title insurance and so forth. So be prepared to meet those extra closing costs. For your information, closing costs is usually about 2% of the value of the home, just for your reference. So it's normally the down payment you have to make, that's a 5%, and then you add 1.5% to 2% onto the purchase, the cost of the home for your closing cost as well. Okay, so before I finalize and go on to the final part and introduce Ali, this part is so important, as a lot of homeowners or first-time homeowners, they tend to skip over this. And that's the importance of having an inspection done in a home if it's a pre-existing home. This is so important because so much things can go wrong that you cannot see with the naked eye, but you need somebody who's qualified to come with you and have a look at that home and just make sure that everything is okay, because once it's sold, that's it. So make sure that you have that inspection done so you have that comfort that you're moving into your home and less stress to deal with. Okay. So my final point is why choose a mortgage broker? As I mentioned, a lot of people reach out to banks because that's all we know. That's usually the standard that we go. We go there for savings, we go there for our mortgage as well. But why choose a mortgage broker is because it will help you save time. That I say because with saving time, we're able to have with Mortgage Alliance, we have access to over 60 different lenders, and it includes some of the major banks as well. So we're able to provide you with the better rates or better rate options for you, rather than you having to go to each bank or call each bank to find out what options you have available, right? The other part is that you get better rates. You see, what happens is that with these lenders, you may not be privy to the special rates that they have out there. These are things that they let the brokers know. Okay, we're then able to pass those better rates on to you. All right. Now, with a bank, it's sometimes only if you tell them, "Listen, I'm getting a better rate here," that they will then offer you that rate. But imagine being able to get that better rate right away, right? It with no conditions on it. That's in your benefit. Okay. More choices and better advice. What a lot of people don't realize is that for some, the mortgage specialists in the banks, they may not be actually licensed as well with the bank because they work under the bank's organization. They're not required to be licensed in a lot of the provinces. So that you find that the advice that they offer may not really suit your situation. So it's best to reach out to our mortgage broker so that we can give you the whole picture so that you understand the whole process as well. Another thing with me specifically is that besides being a mortgage broker, I'm also a financial coach. So I would provide you a more holistic view of the situation rather than just looking at the mortgage. We look at your whole situation to see how everything fits in and suits you best. All right. And this is something really big because I didn't realize how many people weren't aware of this. But once you reach out to a mortgage broker, there's no cost to you at all. You don't pay us. All of this is done through the lender. So get the free advice, sit down with us, see how we can help you. And of course, it's at your convenience. Banks are open in the week. Some I know open in the weekend, but this is more at your convenience. If you're finished work and you need to find out information about a mortgage, but the banks are closed, then you have to wait till next week or you have to organize time from work. You can just pick up the phone and call me, and I'm there to provide all the information you need. So, as I said, what we'll do is we'll have some questions after, we'll save it for later. But again, this is my information here. And again, at the end, we'll bring up both of these so that you can see where you can reach out to us and find out some more information on being able to become a first-time home buyer, or if you're new to Canada and what you need to do to proceed to purchase your first home. Thank you. And at this point, I will turn over to my co-host, Allie White.
That was amazing, Trudy, and it's so true. A lot of people don't know that mortgage brokers are free, and also as using a realtor as on the buying side, it is at no cost to you as well. So that's a great point. So this image right now, let me introduce myself. My name is Allie White. I'm a real estate agent here in Halifax, and I focus on HRM. I do travel outside the city on occasions, but my limits are about an hour outside of downtown Halifax. So I'll go to areas like Truro. I might venture to Hubbards or Windsor, but I don't travel to Yarmouth and Cape Breton and other places. Although there are agents out there who do that, that's just something that I don't do. Anywho's, another story about me myself is me and my husband, we buy and flip properties. So I'm also well versed in the renovation side of things. I like to tell, especially first time home buyers, do not look at this house as your dream house. You will not find your dream house right now. Although, like, if you got an awesome budget, obviously you will find your dream house. But as a first time home buyer, most times the first home is not your dream house, and you have to look past the cosmetic things. So, things that I'm well knowledgeable in is pricing and even a little bit of design. I like to say that as well. Um, so, as all of you know from the headlines and what you see going on in Halifax for the past few years, and I can even say this is kind of pre COVID too, is the seller's market that we're in. So, I want to focus on the market report for Halifax and Dartmouth, and these are the stats for last month. Let's remember these numbers together so you can have a better sense of my home buyers presentation. So, the average time that a home is spent on the market is about 6 days. So, as it's listed onto the websites that we see, like realtor.ca, Viewpoint, Royal LePage, it takes 6 days for that house to essentially sell, basically, or go under pending. Another number that we need to focus on is the inventory. So, right now in Halifax, Dartmouth, so HRM specifically, we have 0.7 months worth of inventory. That's down at 58% from last year. What that means is we have, if you were to divide, what is that? Divide 30 by 7.
30 by 7.
Is that what you do to find the math, or 0.7?
Yeah.
No. You
30
time.
days?
So we have 21 days of inventory.
Mhm.
21 days. So what that means is if as of today, if everything that's to sell go and nothing goes back on the market, it would take 21 days for HRM to be sold out of homes, essentially. 21 days. So a few years ago, that number was actually 3 months.
Wow.
Yeah, so that number was 3 months, and now we're at 0.7 days. And if we were to look at, when I was looking at Nova Scotia as a whole, that number is only, I think it was 0.1, like it was 10 basically. So it's crazy how that works. So the average price that homes are going for is $494,148,000. So if we were to, obviously everyone knows how to take the average for calculation, but that is specifically what most of the homes are selling for. If you were to look at it as what our economy here is doing, it's obviously growing. And I think this is the people's frustration with our current state, is that our home average home prices are going up, but no one's income is going up. You know what I mean? So that is essentially a problem. And these two next numbers are specifically the reason why we are in a seller's market. So new listings as on in October was 489 listings. So in October in HRM, 489 homes went for sale. 509 homes sold in October. So, how does that work? The number of new listings that came on the market is less than the number of homes sold. So, what that means is homes are selling at the rate faster than homes can go on the market. So, that is why we are in a seller's market. Um, and homes right now for these holiday seasons are historically lower. It's not that you can't find anything, but again, it may not be what you want to look for. So now I'm going to share my screen and get up this presentation. So can you see me? Am I
Yeah.
doing it? Okay, great. So the home buying process starts with the buyer's consultation. So this is when I would sit down one-on-one with my potential buyer client, and we would have that discussion about the current home market, about finding financing, and the home buying process. I recommend you do this with every realtor that you meet, even if it's somebody that you know, because you can get great information beforehand. That way, when you are going through the home buying process and the transaction, you can say, "Ah, I remember that from when I first met with Allie."
Yeah.
So that's very great. So this is when I would talk to you and I would tell you about myself. We would discuss the contracts involved with buying a home. So you would read the working with the real estate industry form, the buyer designated brokerage contract, and I would even show you an example of the agreement of purchase and sale. I'm not going to do that right now because those forms are kind of lengthy, and we can, if you want to discuss something like that, you can definitely book a one-on-one with me.
Yes.
So the first thing I would suggest is, and you can go either way. You can talk to a real estate agent and then get your pre-approval, or you can get your pre-approval and then you speak with a real estate agent. Either way, there's no right or wrong in doing it. So for securing a home, right? You need to know how much you can afford if you want to ensure that you get what you want necessarily. So, for example, right now, you may know that homes are going over asking. So, it's great if you know what you can afford because you can say, okay, if I'm pre approved for $400,000, well, I'm not going to look at homes for $400,000. You probably have to look at homes that are $350,000 or $300,000 so you can compete with the other offers. And again, there's other ways that you can win an offer, but this is just for what you can affordability. If we're looking at it, people look a lot on what they can afford.
Mhm.
Um, and I will assist you on this journey. And I do have mortgage calculators that I use to help sit down and say, okay, well, if you're pre approved for this and you have this much money, okay, well, what are closing costs? And this is what you can afford. If this is what you can afford on a monthly basis, then maybe that's how we should write up the letter. Also, the offer. Also, with a pre-approval, oftentimes you can use that pre-approval letter with your offer, and again, it will strengthen your offer. Sorry, just 1 second. Okay, you're okay. No, I'm not done.
We're
Next,
working on this. It's all good, Ali. All
yeah.
good.
Next is searching for a home. So we begin our search and we utilize various resources. So what I usually do is I set my people up on a campaign, an email campaign, and I send you out listings when as soon as they hit the market. You can also utilize those websites, but I find when people send me listings that they want to look at from websites, there already is an accepted offer on those. So I like to tell my clients, please focus on the emails that I'm sending you. And as we go through looking at homes, that's when we can say, okay, well, you don't like this style home or you don't like this area. And that's when we can really narrow down the home search for something that best meets your needs. Also, with going out and looking for homes, I try not to stick with one home for going out on the tour. Sometimes we may go look at two houses or we may go look at three houses. I've had buyers where we look at four houses on the weekend, and it's fun. I love doing it, and I hate hearing, "Oh, I can't believe I'm so sorry you have to take me out on." I do not care. That's what I do, and I absolutely enjoy it. The next thing is developing a pricing strategy. So this is when you find the house that you want and what we are looking for. So again, you look at the location. So At in this location, is it normal for a home to sell for over $500,000? Probably not. But in this market, is it normal for a home to go over asking? Absolutely. And it doesn't necessarily matter on what location. The age of the home doesn't necessarily affect the what you should do for pricing, but it may affect the condition of the home. So now you have to think about, are you going to spend $1.99 a square foot on flooring? And do you need to do the roof? You need to decide on those things, and that maybe that's going to change what you put your offer in on for the home. And I definitely help walk you through this. And it's like Trudy says, if you have any questions, it's not like, oh, at 5 o'clock Allie doesn't answer her phone anymore. Well, I still do continue to answer my phone. And usually on offer day is when me and my clients are talking the most, because we want to make sure we do what we have to do to get this offer accepted. So, hypothetically, we're writing the offer. These are things that we need to consider when putting in the offer. It's actually called an agreement of purchase and sale. So, the first thing we look at is the purchase price, the items that are included in the home. So often you'll see that appliances are included. The deposit. So you do need to put a deposit on a property. Usually, I've seen 48 hours after the accepted offer, you need to put this deposit down. And I've also seen on condition date, you need to put the deposit in. Or me, I just put it down as 5 days out of getting your accepted offer. That way, it gives you time to go to the bank and get a certified check or email money transfer ready. Typically, it was deposit is about $5,000 and more. So the bigger the deposit, the more serious you are taken. But I personally, a deposit is just a very old method, and it's still something that's relevant today. A few years ago, it was absolutely okay to do a deposit of, say, $1,000, maybe $500. But now it has to be minimum $5,000. That's what most of the competitors are doing. You have to determine what your financing method is. So, are you paying for the home cash, or do you need financing? This is when you would put that down as a condition. So, Trudy may need 10 business days to complete the actual financing process. So, we put that down as a contingency. And what that means is within that period, that's how long the prospective buyer has to get financing. The possession date. So the possession date is when you close on the property, and that's when you take ownership. So that's when the funds are transferred and you get the keys. Also, seller disclosure. So there could be we need the property tax bill for financing. You may want to look at the power bill. You may want to know, are they renting the heat pumps? Are they leasing the hot water tank? Because some people do that. And also, again, we talked about the financing condition. Home warranty, that is if it's a new home. With new homes, there's a home warranty, and that lasts sometimes for 5 to 7 years after the home was built. And the condition deadline, so usually it's a week to 2 weeks. Anything past 2 weeks is kind of deemed a no-no, but sometimes you can get that. But if you're going in a competition with other offers, you might want to shorten up your deadlines, but make sure that your mortgage broker can handle those deadlines. Financing and appraising deadline. So that goes in with the financing condition. Closing deadline. So basically, again, the possession date and the response to the offer deadline. So the response to the offer is generally I'm told by the seller what the response should be. Now, there are situations where we can dictate the response time. But as of right now in this current market, most sellers, the seller agent tell us what the response time needs to be. Next is presenting and negotiation. So in most cases, a seller will not accept your initial offer outright. That's just the way it is. Sometimes you'll see a counter offer come back with modifications. They could want more money, or they could want to change the closing date. Sometimes it does go back and forth, but it all depends on the current market condition. If the house was on if the house been on MLS for quite some time, then there is a good chance that they're going to accept your first offer. But just know that in this market, it's an uphill battle, and you may have to put, I don't know, maybe 5, 10 offers on things before you get accepted. That's just the way it is. But I feel so bad, but I don't. It's not. I love doing it, and it's actually a very fun process. And all my buyers, when they finally find a house, they say, "I don't get to see you again." Like that. That's that's how sad they are.
Yeah.
So hypothetically, you get the accepted offer. Woo. Now it's an inspection. So I do not recommend not doing an inspection. Like if my buyers don't want to do an inspection, that's like all on them. I'm going to say, no, you should really do a home inspection, but they're going to say, no, we don't want to. So with doing a home inspection, that is a part of buyer condition. That's a contingency. So the home inspector goes in and they check for appliances, plumbing, electrical, heating, any ventilation, roof, attic, foundation, and structure. One thing to note, a home inspector does not have x-ray vision, and they can't cut through the walls. So they're only looking at the surfaces. There are other home inspections that you can do, so you can get your sewer line scoped. I do highly recommend that. It can save you tons of money, especially if the home it has older home and it has cast iron sewer pipes. Those are you can crack easily. There's also a septic inspection that you can get if your home is on the outskirts of HRM. And there's also a well inspection. So with a well inspection, if it's a drilled well, you can get the water tested and you can get the quantity tested. So they run the water to make sure that the amount of water in the well is sufficient for the home size. And then if it's a dug well, you can only do a quality test. So basically, you can only test if the water is drinkable. Your mortgage lender will often want a copy of that test, essentially, right? Um, Say now after the inspection, if you don't like what you see on the inspection, this is when you can go back to the seller and start to renegotiate money or conditions involved. Say if you need extra time on your conditions because you want to get a second opinion on the electrical panel, so you want to get an electrician in, you can do that. This is when you can do all those things. Anything after the buyer condition date, if you choose to do that, you will lose your deposit essentially.
Yes.
Now we also have the lawyer review clause. So that is something where the lawyer is actually making sure that the home is able to be purchased. Um, and that's basically it for the lawyer review clause. Um, After, say, you love the house, home inspection went good, now, and you get your financing, now we're just waiting on the final walkthrough. There are some small steps between being sold on a property and closing on a property, but that is, you need to send the binder letter to the lawyer. You need to hook up your services. You need to say sign the letter of commitment from your mortgage, I make sure that all that stuff is in order, and that you don't forget anything, basically. Now, the final walkthrough is we go to the home the morning of or the night before and make sure that any conditions that we put in, so we said we want them to install a new hot water tank, those items, those things are done, and basically the home is the way we first seen it, and nothing. And say the appliances were supposed to be left behind, the appliances are there. Those are things that we're looking for, right? And now the closing. So after you have a great closing walkthrough, that's when you tell your lawyer, and the lawyer does what they have to do. They transfer the funds they request the funds from the mortgage, the lenders, and then your buyer lawyer sends the money to the seller's lawyer. So that's how no one physically has the mortgage
Yeah,
money.
right. That's right.
And it transfers from lawyer to lawyer, and then the seller eventually gets their money in their bank account, and then you have ownership of a new home. So welcome home, and that's you buying.
That's perfect. That's perfect.
Yeah,
Yeah. All right. So, Ali, thank you so much for that synopsis. That was great. It's concise.
yeah,
So, it helps people realize the whole process and how everything fits with your mortgage lender, as well as your realtor, and how we work together
yeah,
to make sure that you get into your
yeah.
home.
And also too, there I don't have in there, but I do have a list of vendors that I use. So I do have recommendations for home inspectors. I do have recommendations for, say, electricians or plumbers. I do have recommendations for lawyers, and and even contractors. It's all just a matter of what we need at that time, and I make sure that it gets done.
Yes, and that's the beauty of it as well, guys. You don't have to go and find these people on your own, right? Because of the experience that we've had and dealing with different people, we know who are the best people for you to go to, depending on your situation. All right, so just reach out to us if you have any sorts of questions, even if you think it's a silly question. Just reach out and ask us, and we can help, guide you on that as
Mhm.
well. And I wanted to stress, Ali, on that. The inspection and the walkthrough, how important it is. And yes, it is, the homeowner's final decision, but definitely we highly recommend it because you can avoid a heartache in
Yeah,
there
and
as well.
it's like, would you buy a car without test driving it?
Yes, that's right.
Would you
That's
buy a car with,
exactly.
would you it's I don't know, it's just one of those things that I highly recommend doing.
Yes, that's right. That's right. All
Yes.
right. So we have some time for questions, and I actually have one question already.
Yes, and
Yeah.
make sure that the inspector has a license to do so. So I do work with specifically home inspectors that are licensed within Canada to do it, because some home inspectors out there, and you know what, I don't want to say like they're not good or they're not reputable, but the list, me personally, I have to be licensed to sell a house. So
That's right.
I like to connect myself with other licensed people, like, practice what you preach.
That's right. Absolutely. 100% there. All right. So Motosoy has a question for us as well. She's asking, will I get financing if in the process of my house being built, I've changed jobs from private to NS government job? Will I get financing if I'm not past probation? Okay. So you you can and it all depends on how long your probation is. All right, I want to stress on that as well. So, what you find is that you can begin the process to get financing, but by the time that they're ready to make conditions and to make the payout, you have to be off of probation, essentially. All right. So, say for example, you want to get pre-approved, you can do that while you're on probation. But by the time that they get the process of being able to finance, because what happens is the lender is going to have to call your job and they're going to ask that question. So at that point, you want to make sure that you're no longer on probation at that point. Let me know if that answers your question at all, Montessori. Okay. Um, Something else that you had mentioned, Ali, just from the start as well, was with regards to um, not the first home you buy may not be your dream home.
Oh,
Right?
yes. No, don't focus on the first home because you know what? As humans, we have something called FOMO, fear of missing
Yeah.
out. You know what I mean? There's always going to be a better host. Always.
Yeah.
Even me, I'm in my home and we're currently renovating it, and I'm already thinking, okay, we need to finish it so we can sell it and
That's
get
so
something
true.
else. And my husband says you're gonna go through homes like you go through cars, and you know what? Probably, but this is our first home, and maybe it's not something that at the time when we moved in, this room did not look like this, and my husband did not want to buy it, so we had to overlook the cosmetic things that
Yes.
was currently going on in our house. Like there's still carpet on the stairs, there's still that cushioned flooring in the bathroom. So
Right.
those were things that we have to overlook. And oftentimes walking into homes of buyers, they can't overlook those cosmetic things. And, they want something that's not necessarily there, you know?
Yes. Yes, no, absolutely, absolutely. And it's important when you're purchasing a home to kind of put on your vision glasses to a point, so that
Yeah.
you can see the possibilities of what's out there as well.
Yeah,
Um,
exactly.
exactly. And one point I want to bring up as well is that sometimes what you're going to find is homes that may not be up to the right standard. The prices will be lower for that home. Okay,
Exactly.
but
And
what?
that's another thing too that I like to tell buyers is, say if a home needs flooring and needs a little bit of kitchen updating and needs a little bit of bathroom work. Those things are not a kitchen is not necessarily inexpensive, right?
Yeah,
But you can do those projects on a budget and
that's
you
right.
can make them look very good. And
That's
that
right.
you can increase the value of your home just by doing those few things. And not only is your home going to increase in value by the things that you've done to it, it's
Hmm.
also going to increase in value because of the market.
Yes, that's right.
So I had one of my buyers last year, they sold their house last year front and they bought a house last year, sold it this year, and they made a good chunk of change.
Yeah.
That was just based on, and they had to go over asking too on that property they purchased last year. But it's
Mhm.
just that the market is going in an upward motion,
Direction. Yeah.
and oftentimes too. Well, I'm gonna save and wait for the right house to pop up. Well,
Yeah.
that's gonna cost you in the long
It
run.
will in the long run as well. And something to note as well is that most lenders have an option of where you could purchase an improvements.
Yeah, so I
So
do I do
that's
recommend
right.
that for items too, like say if we look at a house
Exactly.
and the windows need to be done or even
Yes.
the cosmetic work, you can do that with the cosmetic work. But if it's home where windows need to be done, roof need to be done, yeah, you can do those items with that.
Yes, that's right. That's right. I do have another question from Motozoy, where she's asking if I suspect my broker is being too conservative, and it's making her impossible to find the right home that I want. Um, and I know that my pre-approved amount is a ceiling, so she's given some figures. So she wants to find out because she's just finding it a little bit difficult to be able to find the home that she wants. Because again, with the prices of homes, the more that you have access to, of course,
Yeah,
the better as well.
yeah,
And I think this is something that you can definitely sit down and chat with your broker on, because yes, some brokers are going to be a bit more conservative than others, but again, as I was mentioning at the start, look at your figures, all right, because you know what you have to work with. There may be things that you may have to adjust to be able
hmm,
to have yourself be able to accommodate for that amount or that home that you want as well.
yeah,
Okay. And of course, yes, things can happen where you can change jobs, you can earn more money. So eventually it will all come into action where you can meet your payments. But again, make sure that you can live comfortably. And Motozai, we can talk later as well, just as an outside factor, and then I can give you some pointers as well. So
And
that's
also to add to what Trudy says, it's true that a lot of mortgage brokers, they are conservative, and
yes,
sometimes like my clients will tell me their figures and I'm like, that doesn't make any sense. So I said, you clearly need to shop around.
yes.
And then also too, some mortgage brokers go based off of what you have in savings. So if your savings only says that you have enough for $355,000, but your income is saying that you qualify for $375, also take that into account too. Because
Yes, that's right.
some mortgage brokers, they'll take into account, okay, they have this much in savings, but they need this much for closing.
Yes, that's right. Right. So you really need to look at everything together as well. And as I said, being a financial coach too, we can look at different ways where you can save some money to be able to accommodate more as well. So again, that's just a couple of things that we can look at. Avril had a question there. So if you do not have the down payment as a first-time home buyer, what can be done? Is there any help from the government? Absolutely, yes. As I mentioned, there is the down payment assistance program, and I actually pulled up the link here as well. And what it looks like, it looks at the household income. For you to qualify, it looks at the household income. So not just one person, who's making the application for the mortgage. It looks at the household income, where you have to have less. If you have less than 75,000 as a household income, that's gross. That means you would, you can qualify for the home buyers, the down payment assistance program. And that's where they would give you the 5% down payment. And you would have, I think it's 10 years to be able to pay that back as well. Okay. Again, Avril, I can send you that link, and I could make that link available to actually on my Facebook page and both on Allie's Facebook page, so that you guys can see what you need to do to qualify for that and apply for it as well. We have a question from Preston Matthews. Sally. All right, Preston is asking, could you clarify the first-time home buyers program, the pros and cons involved? Great question, Preston. And I just want to say, great question from everyone so far. It's been fantastic. All right. So with the first-time home buyers program, what it's looking for. Okay, what it's looking for is that you need to have a retirement savings plan in place, and this is with your work. Okay, so once you have some money saved there, it allows you to be able to borrow funds from this, essentially. Okay, because you may have cash, you may have savings, but of course there's certain things that you may want to use the savings for, to be able to furnish your home and so forth. So this is a place that you can get the down payment from, to be able to use from. What happens is there is a certain document, Preston, that you have to fill out to be able to apply for it, and all of this is then added on to your mortgage loan, and we present this to the lender as well at that point in time. Of course, we will need documentation to prove what you have saved right now in your RRSP, so that they can see that you have sufficient to qualify as well for it. And the beauty of it as well is that you have you can qualify, you can pay it back in 15 years time. So that's huge as well. Preston, we can definitely chat after, and I could provide you some more details to get into it as well. Question from Tracy. What if you are an entrepreneur? How do you get approved for a mortgage? That's a fantastic question, Tracy. And it's interesting you say that, because a lot of people are going out on their own, starting their own business. But of course, these are people who want homes as well. All right, they want their homes as well. So what they're looking for is, in this case, you will be self-employed. They would normally need 2 years of a T1. All right, so you need to provide that. Also, your notice of assessment, they're looking for 2 years. And this is to confirm, that you have the payment and that you're consistent in getting income coming in. Okay, they take an average of that 2-year period as well. And so what they're looking at is, with the average of of the income, they would look at an average, or they will take the lower one of the 2 years, just to use that as your average income as well. Okay. Um, Let me see what else I can see
Would
on
a line of credit factor in as an
from
or
Preston.
yeah?
Okay. Um, if the line of credit would factor in as an RSP as a form of using for your down payment is what you mean, Preston? If you can use that as part of your down payment. I'm just wondering if you'll respond. Just in case that's what you are looking at, using a line of credit, it's there are some lenders that may do it. Okay. And I'll tell you why it's a little bit, yeah, okay, yes. And I'll tell you why it's a little bit more risky. Okay. Because remember, there was a part of the presentation where I talked about your debt load. Okay. So what they're looking at is what you currently have outstanding as debt. That would be any credit cards that you have outstanding, also any line of credit, any car loans at that point in time. All right. So there is a minimum amount that they look at for your repayment that they look at. So what a line of credit does, if you borrow from that in addition to take as your down payment, that increases your debt load. So it will have an impact of increasing your ratios, and it can throw it out. Once that's over 44% as your total debt ratio, most lenders will kind of back off of that. So yes, you can use it. Some lenders are flexible, but again, you have to look at your debt load just to see the impact that it would have if you're borrowing from your line of credit. But again, and as we said at the beginning, yes, it involves crunching numbers. Let's discuss together so that we can actually get all the figures together and look at it as a whole to see what we can do. Yeah. Oh wow, so we had some great questions, Ali, coming in there.
Great questions coming in.
Yeah.
That's
Yeah.
great.
I wanted to mention, I'm not seeing any other questions coming up so far, but I wanted to mention, just because I've had some experience with a lot of people new to Canada coming in.
Mm-hmm.
What we've found is that, of course, some of these individuals, their savings are not in the country as yet.
Mm-hmm.
It may still be abroad. Okay. And so what you find with that is that sometimes when to bring the money in, especially if you're looking at it just before financing, it can cause a bit of an issue with the lender. Okay. Ideally, they want to be able to see the money in a Canadian account. And I'm not saying that it doesn't mean they're going to not look at your foreign account. That most lenders do as well. But to make it easier and smoother, what I would recommend is if you could bring that money in now, put it in some sort of TFSA, so you have it there, and have that done like 3 months before.
Mm-hmm.
Okay. And once you have that there, you would find that your process will be a lot easier to
Mm-hmm.
get through the process. And again, this is something that we can discuss. But just in my experience, I've found having the money here 3 months prior, because normally the lender wants to look at 3 months of your bank statement to see what's happening and where the savings come from. So you have it there. It doesn't matter if it's outside of the 3 month period, but they can see that the money is here. And
Mm-hmm.
then it will be a lot easier to go through the process as well.
And I like to add to that too, like with the home buying process as a newcomer to Canada, it's not different for me. Like it's not
Yeah.
different if you're first time home buyer. We may take different ways, but it's
Yeah,
not it's the same process.
it
You
is.
still need to get financing, you still need a lawyer, you still need to do this. What I find the difference is patience and that level of care. It's unfortunate, but sometimes, that customer service is lost with certain transactions. So
Yes.
I like to treat everyone the same, and I make sure I go above and beyond for my clients, and you know what I mean. And no one, to me personally, no one will overwork me, so that's how I feel about that.
Absolutely. That's great to hear.
Yeah.
And this is, guys, this is the kind of realtor you want,
Yeah.
right?
And it's true. Like I
Yeah.
guess getting a little personal, like my dad, he has a very thick Jamaican accent, and
Yeah.
I watched him overcome barriers with, native to Canada
Yeah.
people. And it's
Yeah.
just one of those things. Someone said to me before, I can't understand your father's language. And
Yep.
I said, he's speaking English. So I watch those battles with my father. So it's something
Yeah.
that I'm aware of, and I
Yes.
make sure that the level of care is there.
Hi. I absolutely agree to that. And again, as I said, being an immigrant myself, I've been here for just over 10 years as well. But I understand, the process. I understand that sometimes it's difficult, especially where I lived before. I had my own home before. And so you want to be able to move here and have your home here as well, to be able
Hmm.
to have your family comfortable, and get through life, and make Canada, because Canada is your home now. All right.
Right.
So of course, getting a home is going to be a huge step, and we're here to help for that as well. So that's the new to Canada aspect. But again, people who have been waiting to buy a home, and then wondering, can I qualify? A lot of people wonder if they qualify, and they seem afraid to just step in and see.
Oh yes, and I was working with a few people like that, and I said, you know what, just go, just you
Ah,
would be surprised. You
that's
would be
right.
surprised what you qualify for.
That's
The
right.
next
That's
thing
right.
you know, you're building a house. So
Exactly, exactly. So as I said, there's so many options available out there. Let's talk about it. Let's crunch the figures. Um, you're not going to usually get your dream home, but it allows you into the market. And the beauty of being able to get into the market is that you start building equity. Right, as
mhm,
you said, Ali, owning your first home by 1 year, how much equity, especially with the market now, the value
mhm.
of that home is
Oh,
big, is
oh,
big. So
God.
get into the market, get your home. Let's crunch the figures for you so that you can see, let me at least have this. And then you could always sell and buy and move on to your next home. That's as Ali is doing. You may not, it may not be a dream home, but you will get to it. You'll
And
get
and to add, the clients that I was talking about, they didn't do anything to the home.
no,
They did not
no,
a
no.
thing. I don't even think they painted. They paint. I told them, walking up the wall, up going up the stairs, you probably want to paint right there because it's a
Yeah.
little bit scuffed, and that's what they did.
Yes.
That's all they did.
That's all they did. That's all
That's
they did.
all they did.
It's crazy. It's crazy. Guys, it's the housing market is huge, and I think for myself, because I just recently did an appraisal on my home, and yes, we've had it for 10 years, but my home has doubled in value,
Mm-hmm.
200%.
Yeah.
So this is what we're talking about. Let's sit down, let's talk, let's get yourself into the market so that you can see what's possible. All right. As I said, sometimes the worry is having that down payment, but there are things that you can do to be able to overcome that. All right.
Mm-hmm.
If you're a first time home buyer, you can borrow from family. If you're new to Canada, it's a little bit difficult. And I think that's usually just that's most of the difference there as well. But you can borrow for that down payment if you're a first time home buyer. That's fine. That's fine as well. All right. So there's so many options available that you may not be aware of as yet.
Me too.
So let's chat. Let's chat. So I am just going to bring up again my details so that you can give me a call, send me a text. As Ali said, 5 o'clock comes, but yeah, we don't sign off. We still take calls. For one client, I was answering emails at 10 o'clock at night, right? And this is just before financing, because that's the crunch time at that point in time. So you want to make sure everything is good.
Yeah.
So reach out, let's chat, let's discuss stuff, and we'll get you there.
Yeah. I'll bring up my information too.
Perfect. And I can share that as well. Guys, we want to just say how awesome it was just to see you guys. How awesome it was to see you guys on the live, and we appreciate your questions so much. Preston, Tracy, Soy, Avril, thank you so much for those. Those were great questions.
They were.
Yeah. I'm sure that there are other people who had, similar questions who were wondering. But again, if you didn't get a chance to ask a question, reach out. We'll be more than happy to help.
Yeah.
Even on a Sunday. I'm available. I don't know about Allie, but I'm available on a Sunday as well.
Yeah, no, I am.
Yeah. All right.
Okay,
Let me know when it's up, Allie. I could share the screen.
I am. Oh, Peyton.
Yeah. And as you guys can see, we are working mothers.
Yes.
But our kids are involved in every aspect of our lives.
Every aspect of our lives. Oh Lord. Why can I? I'm sharing. I'm trying to share my screen.
Yes, Tracy. The live is saved. It will be available on my my page so that you can look at it again. You can look at it again for sure.
Okay.
Thank you, Motosoy, for being here. Such great questions. Thank you again. Oh, I see it now.
So, can you see it?
Yes.
It's so confusing.
Just make it a little bit bigger. There we go. That's it. Perfect.
There we go. That's my information.
And that's Allie's information, guys. So reach out, and the beauty of it is Allie and I, we can work together and help you to get that home there as well.
Yes.
Okay. All right. Great. I think that's it for questions, Allie. So I want to thank you as well for being here.
Yes, no, thank you for having me for sure.
Absolutely. Very much appreciate. And we'll definitely do another one, and we'll probably be more specific on the different things that clients are looking for.
Yeah, and I'll feel like I'll slow down my talking. I feel like I was talking way too fast because of my nerves.
Oh, it went fantastic.
Okay, beautiful.
All right, guys. Thank you so much. Bye-bye.
All right, bye.